Everybody, it's Barron, Shannon from alphatrends.net. I want to show you some cool anchored volume weighted average price information here. We're going to take a look at the S&P 500 and what we have here on the right on this charting platform, which is TC2000. You can see it's the anchored volume weighted average price by Alpha Trends. When I click on that, it allows me to click anywhere on a chart and put a volume weighted average price. If I want to repeat it, meaning I don't have to click on that anchor each time, I just hit that repeat and I can draw one anywhere. Now that's not helpful. That's not the point. What I want to show you, this is a chart I had shared earlier on Twitter today, and actually it used TrendSpider software, which is a great software as well. On this, what I show is, number one, this blue volume weighted average price is the year-to-date volume weighted average price. That often becomes an important inflection point throughout the year. Since that January high, I drew another volume weighted average price off of that. Because it was a high, I labeled it in red. What we want to look at is if we're below that and it's declining, then we look at the market kind of as guilty till proven innocent. The orange line is the 5-day moving average. If you've been following me for any period of time over the last 15 years, I constantly recommend following the direction of the 5-day moving average for your swing trades. So why do I color code all these? Again, if we go back to that 15-minute time frame, if I just draw it, it deletes to one time frame, and then you can't tell which one lines up with where you anchored it. So back to that 30-minute time frame, here we can see from the February low, which was the beginning of the month, I drew it in green because that's the lowest level, and it did provide support here, and it could potentially be support once again. We also saw an important gap last week. That's that purple line. That gap did hold and find buyers right here. And then again 2 days ago, the beginning of this week. So there was the direction of that moving average that made, and the 5-day moving average, that made me think it's not a time to be bearish. Instead, we want to look at this as a pullback that's potentially buyable. So looking at this, again, these are 30-minute candles. Let's look at a 2-minute time frame. I want to show you some cool intraday stuff. So if we look at since the beginning of the week, that's this blue line. This is the 2-day volume weighted average price at the end of today. So when I refer, let's say we're halfway through the day, if I say a 2-day volume weighted average price, what I'm referring to is the volume weighted average price that was anchored at the beginning of yesterday and whatever period has elapsed today. It's really only 2 days at the very end of the day. But what we often see is that when a market gets extended like it does today and it begins to pull back, that becomes a potential level of support. I had identified this as a level of interest, and that's all it is. It's a level of interest. We want to look at the market at that level and say, do we want to be a buyer here? If we do, I don't personally want to buy as it tests that, but as it turns higher from that level with a stop underneath it. And then we look for whatever our potential upside is. Or you might even be looking and saying, okay, that's my downside target if I was short. Now we're talking about shorter term time frames, but of course you can look at any time frame. If you remember the article I had written in 2008 called Chase the Gap or Wait for VWAP, what I was referring to is when a stock or a market gaps higher, we don't want to chase that market and buy the open, because maybe, with hindsight, we know it had recovered from there, but maybe it would have continued to do this throughout the day. Instead, we want to wait for evidence that buyers regain control. That happens right there where the price crosses back above volume weighted average price. So that's a place to buy for a short-term trader with a stop below the low of the day. Notice how that volume weighted average price then found buyers right here and again at that point. I'll show you something a little bit more interesting, which is if we take a look at the volume weighted average price and do it from yesterday's close, you'll see that was the low in there this morning as well. So sometimes it's advantageous for shorter term traders to draw it not only at the beginning of the day, but from yesterday's close as well. Let's just clean this up a little bit and we'll go back to putting it on today's close. So you can see, today's open. So had you been a buyer right in here, well, as it made a lower low below that flat to declining volume weighted average price, that was the proper time to take a profit on a very short-term scalp trade. And you can see the price did drop from there. As it broke below the volume weighted average price for the day and then made a lower low here, what we want to do is then at that point say, okay, well, that looks like an important high. It was also very close to daily R2. What I'm going to do now is just color that red by right-clicking on it. So because that was, at least at that point of the day, the high, and we don't know that going forward, but that was the high of the day at that point where we decided here to draw it in. As it dropped back down, you can see it didn't undercut the prior low from that morning, but the next rally came right up to the volume weighted average price from the peak, which was at that time approximately the same as the daily volume weighted average price. The thing you'll notice here is the direction of that was still lower, which is why you wouldn't want to buy here. Plus, it had just expended energy. If anything, you would have wanted to buy on the next break higher if you were looking to purchase. But at this point, the volume weighted average price from the peak was declining. And then we look at here, we can say, well, let's draw a volume weighted average price off of that level. Well, then as it broke down to a lower low below here, here's another opportunity to get short. So we're shorting on the break of the volume weighted average price from that prior low because it tells us the average participant on the day at that point on the long side was losing money. The average short was making money, so they might go ahead and press this. So as we break down, we say, okay, well, we just tested these two volume weighted average price levels. Let's draw another one off of that. What we'll do is we'll just color that black so we can see that what that price is. It came down, it crossed back up, and you can do this over and over again. So for instance, it rallies back up to this volume weighted average price. We draw another one here, and then maybe you would have shorted even at this point. It depends on your time frame. This is micro scalping, of course. This is for very short-term traders. Had you shorted here, well, what would you do for a stop? To me, it seems pretty obvious. Your stop would have gone above this level. If you shorted over here, your stop would have gone above this level. If you shorted here, your stop would have gone above that prior little high. So we use these lower highs as protection for our shorts. If we had shorted here, what we would have done is we would have looked to cover at the 2-day volume weighted average price. And that's exactly where we found the bounce. So if, let's say, you didn't have a position there, maybe you thought that it would have been a place to purchase. Well, you could have purchased there and then sold as it broke below this volume weighted average price. I realize that I'm not talking to scalpers for the most part, anyone listening to this video. What I'm trying to show is how you can use these levels of interest to guide your judgment and say, where do I want to purchase? Do I want to purchase here, or do I want to purchase that first higher candle right here? And then as it continues, and set my stop underneath this level. And here we're looking at 30-minute candles. So then maybe you want to purchase here with a stop under that level. Know your time frame. Know what's appropriate for you. There's no perfect time frame. I simply point out levels of interest. I'm never going to tell anyone, hey, you should be a buyer here, or you should sell short as it breaks below this, the volume weighted average price for the day. That's up to you to decide what's appropriate for you. I hope this information is helpful. Let me know, and I'll do more of these types of videos. Have a good night.